Talk to me about infinite banking. What is it? How does it work? Give me the nuts and bolts of things.
Sure. So yeah, so there's a lot to unravel, but I'll give you sort of the sort of shortened version. Um, Basically, you have to save your money somewhere. Your money has to reside somewhere. So we think that that place should be a rock solid, bulletproof place that's not subject to market corrections or fluctuations in the stock market. So we think we can talk why cash value life insurance is the best place for that. So we grow that money inside a cash value life insurance policy for the rest of our life, tax free. Never pay a nickel on that, corporate or personal dollars. We grow that money tax free. We're going to have a tax free retirement, but we're going to multiply those dollars and also provide a death benefit for our family if something happens to us, or to keep that business or apartments in the family when you die. And then the third thing we're going to do, we're going to multiply money again, and we're going to literally keep the money in the policy so it's compounding tax free for a tax free retirement. And we're going to leverage that money, 90% of it, to put back into the business or back into real estate or back into some other opportunity that we can grow our money. So we're talking about and assets. Every other asset you have is an or asset. Do I put money in real estate or my business or my RSP? This is an and asset. I'm going to put my money in the cash value life insurance, grow it tax free for a tax free retirement, multiply it for a death benefit, but also be able to use that money short term to grow my business and keep my business afloat.
Okay.
The main reason why I did a huge deep dive on this about a year ago was because of the fact that you can borrow from your policies, which I thought was super cool, and it still grows while you're borrowing it. And obviously, we'll go through the details of like how that works and how you do have to technically repay that and set up a payment structure. But before we go there, who like in your mind, after dealing with probably hundreds of clients, like who is this right for?
We typically only deal with entrepreneurs, business owners, real estate investors, people that have a healthy income, family income 100K and a plus. I don't think this is for everyone, and that's where I just, kind of kind of vary from some of the people in this industry that if you can fog a mirror, great, you're a perfect person. Let's go. I think if you're not able to save five or $10,000 a year, then you're probably not ready for this strategy. You should focus on, managing your budget or investing in yourself to improve your income so you do have that amount of money. $100 a month into something like this, you're not going to get to a point where you can really get the benefits of this. But if you're a real estate investor or business owner, no brainer. Like business owner, the corporate money, it's a slam dunk because there's so many additional levels of taxation we face as business owners, and this can defer or eliminate a lot of them.
Okay, that's cool. I like that. So is there like a sweet spot in terms of money you would want to have in a policy where it starts to make sense? Or is it one of those things you build towards? How does that approach work for someone who doesn't have this in place at all?
Yeah. So typically, again, like think of it as a savings vehicle. And if you think of it from a savings vehicle, it's like people say, well, how much do I have to put into this? And I'm like, well, nothing. But think of it as your opportunity fund. How big of an opportunity do you want to take advantage of? Right. So I put in multiple six figures a year because I think this is an amazing place to grow my money for a tax free retirement and use it in the short term. You're typically not going to see anything under 500 to $1,000 a month, all the way up to 25 grand a year, something like that. A lot of people, when they learn about RSPs versus this, or sometimes taking that 25 or 30 grand into RSPs and putting it in here, just saving it at a different spot. We get a lot of business owners sitting on cash that will throw, significantly more than that in, like six figures or multiple six figures in a year, because as opposed to saving for like an RSP where you put your money in, it's in prison for the rest of your life. Here, you put your money in, and if I can't make payroll this summer, I know I can access that money in my cash value life insurance policy. So there's no fear of putting this money in there, knowing I have access to it, and that's really the key for business owners because business owners tend to be sitting on so much cash because they're scared to invest because what's going to happen next quarter, next year? I need access to that money.
Yeah, I find
Cool.
we do that in
And
our industry specifically because it's feast or famine, seasonal slowdowns. Spring market, you make your nut for the year, and then January might be a bit quieter. So you're sometimes sitting on that whole chunk of money, which, it's not doing anything for you at that point. It's just sitting there, not collecting any interest or anything, right? So,
Yeah, I think every business is seasonal. Like every business, our business, in our business, it's the fall in January when people get excited in spring to get it done before summer. There's not a lot of people beating down our door in the middle
Yeah.
of July. As opposed to your business, summer's busy. Like we have a couple cattle farmers. I love these people. Like they use this infinite banking policy. They sell their herd, go off to market in the fall, and then they fund their policies and all this stuff, and then they start accessing loans to buy the little cows in the spring, feed, grow, costs, borrow against it, and then sell. So really, when they say it's called infinite banking concept, the possibilities are infinite.
Yeah.
So across
That's
the
really
board
cool. That's a
business.
cool example because it's like you're basically saying any business can get into this as long as it makes sense from like a cash flow perspective. And from my mindset towards it, like the way I simplify it in my mind, and please correct me if I'm wrong because I'm new to this, but instead of, let's say you have 50K every year that you're going to be having like a cash surplus in your business. And instead of having that sit in either your personal bank account or a corporation, or even investing it into like high risk stocks, you're saying put, maybe not all of it, but put it into a policy for this example. And that's going to grow the policy. You're going to have the compound interest in it. And then at any point, if you wanted to pull that money, you can do so and invest that in whatever else you want to do. And that policy is still growing in the background as long as you repay the money you're taking out. Am I correct in saying that?
Yeah, absolutely. So just couple clarification. I wouldn't say you're borrowing from the policy. You're borrowing against the policy is technically, right? Because
Okay.
we're not actually, if I've got 100 grand in there and I'm borrowing 90 grand to take advantage of an opportunity, I still have the full 100 grand in there, like you said. So we like the term borrowing against it. But yeah, that's exactly it. And you got business owners sitting on retained earnings. That's really tax efficient money, right? Like in Ontario,
Yeah.
like level 12.2% tax on that first 500,000. So you get these tax efficient dollars, and you talked about investing, and we can get into, the 3 or 4 levels of taxation when you start investing inside a business, that we can address all 4 of them.